Hello, everyone. This is Advan from GDI Consulting. Welcome to our webinar on GSA HCaTS 8A Pools 1 and 2 on ramp. We're going to hold this webinar and discuss the requirements, the self-scoring system, and how to win on this HCaTS, which is for 8A companies only. Before we start, I wanted to give you some administrative notes. First of all, the webinar is being recorded, and you will be receiving the webinar replay in about 24 hours tomorrow. So in case you have to drop out or you have any connection problems, we'll be sending this to you. As long as you've registered, this will be sent to you. If you have any questions, please type them in the right-hand side chat box, and we'll get to them at the end. But please continue and do write your questions as we go on. So at the end, we'll go over them. We'll spend some time going over your questions and answering those that we can. Also, in case you want to download the webinar presentation, we've turned it into a PDF file, which you can download by clicking on the File button again to the right. And also, if you want to enlarge your screen, there is a red button to the right with 3 dots on it. When you click on it, the window expands and you don't see that panel to the right. But if you want to download the presentation or chat, you have to click on that red button again so that the panel appears. Okay. Just a very quick note on our company, just in case you haven't participated in our webinars before. GDI Consulting has been in business for over 10 years. And just to go quickly over these, we are growing each year exponentially. And we have an 81% win rate in the capture and proposal management jobs that we take over from our clients. We also do staff augmentation, of course. And we have about 50 proposal managers and writers and capture managers, and about more than 80% of them have over 20 years of government experience in proposal writing as well as capture. We've had 210 wins in 2018. Look forward to more wins in once the results come out for 2019. Okay, what are the goals for today? Many companies, as you know, this HCaTS is a self-scoring system, evaluation system. So many companies have problems with how this works. Also, companies want to know what the requirements, the minimum requirements are for HCaTS, and understand how they can maximize their score and what is this compliancy barrier that everybody talks about. So I'll go over all of these. And so the result is that hopefully you can have a clear picture of what a self-scoring system looks like, how you should do a go, no-go analysis, understand what can go wrong when you're preparing the proposal, and how you can actually try to maximize and get a winning proposal. So we're trying to go over these points during the process. The outline of the webinar will give you some information, general information about this GWAC. What are the key service areas, KSAs as they call them? What are the minimum requirements for this HCaTS? How does the self-scoring system work? The volume structure, the scoring system, what should be your win strategy, and then we'll go to the Q&A and answer some of the questions there. Okay, let's go over some of the major features of this HCaTS. This is obviously by the GSA, General Services Administration Agency. The full name is Human Capital and Training Solutions, 8A Small Business, Pool 1 and 2. So this is only for 8A companies, but it covers both Pool 1 and Pool 2, and we'll get to those if you're not familiar with what they are. The RFP has been released November 27th. It's due January 28th at 6 p.m. 2020, of course. And questions are due on 20th of December. So you should make sure that you send them all the questions that you have by that date and time. That's the solicitation number. You might not find it easily. If you type HCaTS on the new SAM, you're not going to find this. So what we've done is we've put a link to this number. So when you download the PDF, you can click on this link and go to the correct solicitation. So some companies didn't even know that the HCaTS had come out because if you search by the word HCaTS, it's not going to find this one. That's one of the peculiarities of this new SAM. Okay, now, what are these two pools that I talked about? Well, HCaTS covers two major areas. Pool 1 are 3 NAICS codes, 611430, which is Professional Management Development Training, 699, all other miscellaneous schools and instruction, and 310, vocational rehabilitation services. So you need to be, in terms of size standards, $12 million. That's average 3 years your income. So that's pool 1. Now pool 2 is the major one is 541611, which is administrative management, general management, consulting services. A lot of staffing and things like that go there. 541612, human resources consulting services. 613, marketing consulting services. 618, other management consulting services, and 611710, educational support services. So all of these go under pool 2, and there the size standard is $16.5 million. So the average 3 year of your company size should be less than that to be able to be eligible for this. So these are the two pools. You can participate in either or both, and we'll get to that. So you can go for pool 1 or pool 2, or you can prepare your proposal and submit it for both pools. Okay, the ordering period for this GWAC is 10.5 years, but because at the end of that 10.5 year, when they give you a task order, and the task order can be up to 6 years, you have approximately 16 years for the entire period of performance. That's what it could be, not necessarily what it will be. It's obviously a multiple award IDIQ. GWAC means government-wide acquisition contract. In other words, if you get on it, you're going to get task orders from many agencies, and more agencies are coming on these HCaTS. A lot of them are currently the military, but other agencies, the civilian agencies, are also coming on it. Number of awards, 20 for each pool, to make an overall 40 awards. The maximum contract ceiling value, that's a mistake. That's not a 3.45. 3.45 million is for pool 1. For pool 2 is 2.3 billion. So overall, it's 5.75 billion. And the good thing is that this is specifically for this 8A. At least the way they have written it is that as if they're not going to deduct the other task orders that they give for example, the GWAC, the SP GWAC from this. This is going to go, the $5.75 billion is going to go all to 8As. This is how they've written it. We'll have to see how it comes out. And of course, the set aside is SBA certified 8A companies only. So you need to be certified by SBA to be able to participate in this, certified as an 8A. Okay, there are 3 areas, and this is important to understand. Key service areas, as they call them, or KSAs. One is customized training and development services. Second one is customized human capital strategy services. And third is customized organization performance improvement. Now, the emphasis is on that word customize, and this is important. We've seen people lose and not get on this because they couldn't prove that the projects that they performed were customized type of training. You can't just, provide a normal training that is not customized to a specific subject. If you do that, the GSA is not going to accept it. So customize is the key word, and you need to prove that in the documentation. We'll get to that later on. Okay, so those are the 3 KSAs, as they call them. Now, what are the minimum requirements for getting on this? And remember, I'm talking about minimum requirements, not the requirements that you can win with. These are the minimum. Obviously, you need to be a SBA certified 8A, and you must be small under the pool. For pool 1, you must be small, $12 million, 3 years average, and for pool 2, it's $16.5 million. Now, you must provide 6 contracts, and we'll get to those. The important thing is that you must be prime on those 6 contracts. So you cannot submit projects that you were subcontract on. This is important. Remember, you need to select projects that you were prime on. If all your projects were subs, you participated as a sub, you cannot participate in HCaTS. But the good thing about it is that even very small projects can be taken on. I'll explain that. Now, the scope, contracts must have a customized component and cover at least 1 KSA. So this is the important part. Remember that you can't put in any contract. It must be a customized component in the scope of the work, and you need to prove that. Now, as I said, the contracts can be as small as $25,000. So if you actually perform the contract as a prime and the value was $25,000, the annual value, you're good to go. Now, when I say annual, it means that if you did a project that was $40,000, but for 2 years, then 40,000 divided by 2 becomes 20,000. So that's not eligible. It has to be 25,000 annually. So whatever the length of the project, 10 years, you divide the total value by that 10, for example, and then you get to the annual value. So that's the important thing. Now, contracts must have been performed during the past 5 years. And how do they calculate what is past 5 years? That's from the RFP closing date. The RFP closing date is 28th of January, as we saw, 2020. So that's the 5 years. So 2015, I would say January 2015 would be the cutoff date. It couldn't be finished before. So you can't use a project that was, say, even 15th of January 2015. They're not going to accept it. It must be after the 28th of January 2015 to be acceptable. And the performance period must be at least 3 months. So in other words, you can't use a project that was 2 months or 1 month. But do remember that if the project is ongoing, it's acceptable. So you might have a project that is ongoing until 2025. That's fine. But you have to prove that it has at least 3 months of performance. So you can't use a project that you got last month, for example. Okay, 4 out of 6 contracts, as I said, you need 6 contracts. 4 of them must have the target pool's NAICS codes. So that's important. Those NAICS codes that we went over, 4 of the 6 must have that. So now, if you're going for pool 1, 4 out of the 6 contracts that you're going to show must have the NAICS codes, one of the 3 NAICS codes for pool 1, and the same stands for pool 2. You cannot mix. So if you're going for pool 1, you must use at least 4 of them. 4 of the contracts must be for pool 1. You can't use pool 2s for pool 1 and vice versa. Now, One of the important things here, JVs and CTAs, in other words, prime subs, are not allowed. Everything is on your company itself. So if you're thinking of being a sub to another company, it doesn't work. If you're thinking of optimizing your score with bringing in a sub, like it's possible in Oasis or other projects similar, that's not acceptable, and JVs are not acceptable either. So everything must come from your company, in the name of your company. And finally, in terms of the minimum requirements, past performance rating of 3, which is satisfactory or higher, is required. So you can't use projects that you didn't do well and you had a less than satisfactory rating. And we'll see that past performance is king. It's the most important factor. So you really need to work on those or bring on those projects that you did excellent on. Okay, having said that, let's look at the proposal volume structure of this. There's a volume 1 eligibility. This is essentially the forms that you have to fill out. Volume 2 responsibilities, essentially financial standings and some of the forms and that sort of thing, certain reps and the documentation that usually you provide with any proposal. Now, volume 3 is the major one, which is called the relevant experience projects or reps and past performance. And we'll get to that, what these are. But essentially those 6 projects that I told you about, they're going to come in here. They'll be in volume 3. Now, if you're going for 2 pools at the same time, you have to have 2 volume 3s, one for pool 1 and one for pool 2. And then volume 4 is some of the accreditation that you have, like whether you have ISO, you have some of the accounting systems that they're looking for, things like that. Volume 5 is pricing, and they're going to look for a reasonable pricing. So they're not going to, for example, you're not going to lose due to pricing. So it's not the lowest price. This is not an LPTA. They just want to make sure that your pricing is reasonable. So don't think that you're supposed to give the lowest prices. You need to give them pricing that you can actually perform with. And usually it's much easier than what you think, this volume 5. Everything should go into volume 3. The others are essentially some administrative work that you have to do to prepare the proposal. And we'll help you on that, of course. Now, this I want to go over the self-scoring system just in case you're not familiar with it. The self-scoring system, and this is similar throughout for HCaTS, Oasis, VETS, Alliant. We've done a lot of that. We got just the recently announced the HCaTS Pool 1, and we got 3 wins out for that. So we are quite familiar with how it works. It works like this. Essentially, first you assess yourself, that's why it's called self-scoring, and fill out the self-scoring spreadsheet. So you score yourself. You give yourself a score, and then in addition to that self-scoring spreadsheet, you need to substantiate your score. So you provide some documentation to prove the way that you have scored yourself is correct. That's essentially your proposal. So there's no writing involved as far as, writing a major piece of technical or management volume, things like that. It's essentially you self-score yourself and then provide the substantiated documents for that. Once you send the proposal to the government is going to, first of all, weed out a few things right at the beginning to make sure that, that's their first line of defense. So because they're going to get a lot of proposals, so they'll go for compliance and they'll remove some of the non-compliant proposals initially, and then they will rank the proposals based on the scores that you actually did. So they'll look at the scores that each company has done for themselves, and they'll rank it because they're supposed to pick 20 for pool 1 and 20 for pool 2. So they rank it based on the scores that each company has done. Then they start checking those substantiations that you've sent, the documents. If it's good, that's it. If not, they'll remove you from the list and put in the next one. And this way, they will pick the top 20 companies for each of the pools. So this is the process. It might seem simple, but it's very complex as far as contractors are concerned. Essentially, the government has put the burden on us, the contractors, instead of doing it themselves. So they only check the scores, and then they check whether the documentation is correct. But the major part of the work is done by the contractors. Now, I have also written that priority is given to the previous HCaTS small business awardees. That's something that they've added to the RFP, saying that if you were an HCaTS awardee previously, and of course you need to be an 8A, then no matter what score you have, even if you're lower than the 50th or 100th company, you will be on that list. So it's 20 plus whatever HCaTS SB awardees are 8As and do provide their proposal. So if you are an 8A awardee, already awarded an HCaTS SB award, and you're an 8A, you should go for it, because your seat is already reserved. All you have to do is submit your proposal. It doesn't matter what your score is. They'll just check and make sure that if everything is correct, you will have a seat on this contract. So don't forget to do that. If you're an HCaTS awardee already, an 8A, do that. So although they say 20 top companies, it's going to be more, because some of those HCaTS awardees are going to be added as well. But the good thing is that they're not going to subtract that from the 20. So they're going to give 20 new companies awards as well. Now, how does this scoring system work? As I said, you need to provide 6 past performance contracts, which have been done in the last 5 years with at least 3 months of performance, and you need to be prime on them. But the scoring is like this. The total score is 28,470. Now, don't ask me why it's not a round figure. That's the way they've put it. So 28,470 is the maximum score that you can get. Now look at this. The past performance is 15,000. That means that if you have 6 contracts and you have exceptional past performance for each of them, they get 2,500, and 6 times 2,500, you get 15,000. So that's why I said past performance is king. So in selecting the contracts that you have, it might be a contract that was only $25,000, but if you have past performance that is exceptional, it's much better than having a $2 million contract with a say, for example, satisfactory past performance. So past performance is king, and when you're selecting the 6 contracts, make sure that you consider that. Now, KSAs, those key service areas, you get, depending on how many of those your 6 contracts have or cover, you get maximum 8,200 score. And then other attributes of projects, we'll get over some of them on the next slide. You get 5,110. And the last, which is not much, is 160 points for the accreditations. In other words, as I said, like if you're ISO certified and things like that. So unlike other things like OASIS, where the accreditations are a major part or are important, you get a lot of points for it. Here, it's not important because essentially GSA understands that many companies in this space do not have those, so they have not put that much of a weight on it. Okay, here I've listed some of the those scores a little bit more in detail. If you have a federal project, you get 300 points more. So you can use commercial projects. There's no restriction only that you lose 300 points per project. Sometimes it's better to do that, and I'll tell you why. Going on KSAs, key service areas. If you cover 3 KSAs in all the projects, in each project, you get 1,200 points. If you cover 2 KSAs, you get 600 points. If you cover 1 KSA, which is the minimum, you don't get any points. Remember that each project must cover at least one of the 3 KSAs, key service areas that we mentioned. So if you have more than 1, if you have 2, you get 600 points. If you have 3, you get 1,200 points. If all the KSAs in all 6 projects, you cover them all, in other words, the 6 projects, all the 6 projects have the 3 KSAs, you get 1,000 points more. If 2 of the KSAs are covered in all the 6 projects, you get 500 points. Now look at the annual dollar value. Remember that I said 25,000 is the minimum. That's the minimum, but you don't get any score for it. But if it's between 100K and 300K, you get 125 points. Between 300K and 500K, 150 points, and it goes on until 900K, which is 225 points. Now, consider this. Assume that you have a project, federal project, that you did for $25,000. Okay, for 1 year, of course. You get 300 points for that because it's a federal project. Now you have a $2 million project, but it's not a federal project. For a $2 million project, you get 225 points. So you see that here you need to pick that very small project, but which is a federal project. So the combination of these tells you how which projects to pick. And I will show you a tool that we use to tell us which projects to actually pick later on in this webinar. Period of performance, that's an important thing for them as well. So if it's, say, less than a year or 12 months, you don't get any points. But if it's more than a year, in other words, 13 months to 37 months, 3 years, you get 100 points. If it's 37 months to 61 months, 5 years, you get 125 points. And if it's longer than 5 years, you get 150 points. Another factor that gives you some points is subcontracting. If each project that you did had 3 or more subs, you get 85 points for that project. I have not covered everything in this slide, all the point scores, but these were some of them. Past performance is perhaps the most important. If the project that you did was a satisfactory project, you get only 200 points. But if it's an exceptional project, look at the number, you get 2,500 points. So you might have a project that is not even federal, that is not even any of those dollar values, no points there. It's only a year, all of that, but it's an exceptional project, you get 2,500 points. Whereas you might have a multi-million-dollar project, a federal project, but you have satisfactory, you will get much less points for it. So that's why past performance is king compared with all the other points. So that's something to consider again when picking the projects. Okay, what can go wrong in your proposal when you're preparing it? First of all is compliance. I should say first and last is compliance. Because it's the first line of defense for the government. They're going to put aside any proposals that are not compliant. So that's really important. And I've seen many companies get thrown away because they were not compliant. I'll show you a graph on that. It's really hurting the way it shows that many companies have had very good projects, very good scores, but they were just non-compliant and they were put aside. So that's one thing to make sure that you are compliant. Late getting proper signatures from COs. You need to get some documents signed by contracting officers, especially if you don't have them. For example, you need to provide FPDS printouts. Now, sometimes projects are not on FPDS. FPDS is the federal government's list of contracts. Sometimes you need to get contracts signatures from your purchasing agents, the commercial projects that you have. So you need to get those signatures. And you might think that you have a lot of time because they've given you until 28th of January, but we're going to hit Christmas time. And then in January, sometimes these purchasing agents, these contracting officers are not around. So you really need to go after them quickly. Now, you first need to decide which contracts you want to go after, or at least have some spare ones. So in case one doesn't answer, you can have the other one. So make sure you plan accordingly for this and not lose time. Not maximizing your score. Well, that has, I've seen that unfortunately a number of times, that companies can actually get more scored, but they just did not understand the language of the RFP properly. And this is new to many seasoned proposal managers, these self-scoring projects. So they don't understand what the meanings of these things are, and they just don't use or don't claim what they actually have, and they don't maximize their score. So that's something to watch out for. Not substantiating your score properly. That's another problem. You actually deserve it, but you don't substantiate it properly. You don't provide the documents that they're asking for. You don't provide the documents in the format that they're asking for. You don't provide the documents in the format, and you don't highlight the proper locations of the document, so they're not going to see it, things like that. So it's really important to actually substantiate your score with the documents that they're asking for. And then finally, not submitting the proposal correctly. There are a number of things that you have to fill out a proposal tracking form. You have to put it on CDs. You have to have it in proper format in terms of the volumes, and they're going to pick on it. So this goes back to that compliance issue. Make sure that you don't make any mistakes there either. Now, I did want to show you this. This is a non-compliance history on the previous submission of HCaTS. It's really hurting when you look at it. Out of the 95 companies that submitted proposals for the HCaTS small business, 66 of them, that's a little bit less than 75%, it's actually 73%, were eliminated for being non-compliant. And don't think that this is only for small businesses. Look at large businesses. This is for large businesses. In large businesses, you have 80 proposals submitted. 39 of them, nearly 50% of them, were eliminated for being non-compliant. So you can see it's a major issue, this non-compliance, and should take care of it. I hope I have frightened you enough so that you can spend enough time on compliance. Okay, what should be your win strategy? You should do a thorough go, no-go review. And if you download the presentation, which is in the PDF format, there's a link there. We've created it's a free online go, no-go system. You can fill it up. And once you submit it, we'll get back to you within 24 hours, tell you if we think you do have a good chance or not. So by all means, use this system, and we'll get back to you and let you know if we think that you have a good chance or not. But you should do that before you spend any time, whether you do it internally, whether you outsource, whatever. But do a thorough go, no-go review. Past performance is king. We saw that. 15,000 points out of the 24,000 points comes from the past performance. So make sure that you maximize that as much as you can. Now, maximizing your score, you should go for that. Use of the per contract scoring system and assessment. I'll show you our self-scoring matrix. You should create something similar to that for yourself if you're doing it, in which you give a score for each contract independent of the others, but score it for everything, for value, for how many KSAs it covers, for subcontractors, whatever. And sometimes, as I gave you some examples, sometimes a very small project will give you more points than a very large project. So you should score each project independently of the others and then decide which projects, which 6 to pick. Maximize the use of your commercial projects. Okay, as I told you, even though you get 300 points for federal projects, sometimes you have good commercial projects that you can use, and that way, actually, you can get higher scores. And when I say commercial, it also means all state projects as well. They're looking for federal only. So anything outside the federal is considered commercial projects. Use friendly COs to maximize. COs, I mean contracting officers. Sometimes you have a very, very good project, but it has a different NAICS code, and you can't use it. It's not in the NAICS code that you want. But the contracting officer is friendly, and they would accept to change the NAICS code. Or sometimes you just don't have a past performance, but you know that the contracting officer would be willing to give you a very good past performance, so you do that. Now, do remember that if there is a CPAR for your federal contracts, of course, if there is a CPAR, you cannot get a PPQ, a past performance questionnaire filled out. I'm talking about only those cases where for federal contracts, there is no CPAR past performance record for you. In those cases, you can approach the contracting officer. If a CPAR exists, you must use that. Whether it's bad or good, you must use that. You cannot use a past performance questionnaire. And finally, check compliance, think compliance, and eat compliance. I think I've given you enough on that so you understand what I mean. Okay, this is a sample of this and the next page. You'll see this is a continuation of that. This is a sample of the self-scoring sheet that we use per contract. Each of those rows is one contract for a client. So we put in the NAICS code, we put in the total amount, then we put in the performance period, we calculate the annual revenue, and if it's red, I know that this one, it might be too small for you, but I can read it. It says 18,000, even though the total value was $82,000, but when I calculate the annual value, it comes to 18,000. So I know I can't use this. And then I can get the total score for all of these based on this table that we've created for ourselves. It tells us which score each thing gets. When I put a 1 underneath each of these columns, it is automatically calculated in the total score. And this way, when I look at these, say right now we have 7 contracts here. When I look at these 7 contracts, I can see which ones I can use. First of all, I need to pick 4 that are out of the 6 that have the proper NAICS code. So these green ones under the NAICS column are the ones that I must use, and then I can use 2 others. And then I look at the total score as well. And this way I can know which contracts I can pick out of the number of contracts that I have. And I think every company should do this. And since the contract value, the minimum contract value is $25,000, you would have a lot of contracts to pick from. So you need to do this for all the contracts that you have to make sure that you actually can maximize your score. And this second screen is the continuation of that. So each of these contracts, they have an annual dollar value, period of performance, past performance, and so on and so forth. And when I put a 1 under them, I get the score for that particular, for example, past performance. For these 4 contracts, I get a full 5, which is the 2500 exceptional. So what are the services we provide before we get to Q&A? We do an initial go, no-go, free and online. And I've put a click here, link here. So if you download and click on this, you can go to that go, no-go page and see if it's fill it up, and we'll get back to you within 24 hours and let you know. We also do full proposal development. And that includes, first, we do a score assessment and optimization. So before actually preparing all the documents, we first score you based on all the contracts that you have. So we receive all the contracts from you. We go through all of them. We assess and then optimize the score. We come up with the score. And then if we think it's a good you have a good score, we go to the next phase, which is essentially preparation of the forms, the proposal assembly, and then we do multiple, at least 2, sometimes 3 or 4 times compliancy checks to make sure that there's no problem. Some companies have done self-scoring before. If that is the case, we do reviewing for them. So we do compliancy checks for them. So once they prepare their proposal, they send it to us. We do compliancy check and also make sure that they have actually optimized their score. If you have not done self-scoring before, our suggestion is that you do not do this, but it's of course up to you. We've seen many companies lose, and I think I showed you why with those non-compliancy graphs. Okay, we have also put some links here in case you want to contact us, phone number and email for myself and for Maron, our business development VP, just in case you wanted to contact us. And by that, we come to the Q&A. First question is this: I know it depends on the respondents, but what do you think the minimum number of points a company will need to have a chance of winning? We're working on this. We will be sending, we have, let me explain what we've done. A lot of this depends on the contracts that companies have won. We did this once in 2016, 2017, and we did it again last year. But what we do is we go through the database, the government database, in terms of the contracts that they have awarded. And we've created an AI, artificial intelligence software that goes through the entire entire database, and then extracts all those contracts that do cover these NAICS codes. And based on that, will tell us how many companies there are and what the expected value for each of those companies will be. So we will have some sort of an idea. The AI is still working. It's been crunching numbers for the last 2-3 days, actually. We should have something for assessment during the weekend, and we'll be sending everyone an email letting you know, everyone who's registered, what we think the winning number, at least, or the minimum should be. And I think that will help a number of companies to decide whether they want to continue on or not. Okay, next. If a company only has 4 years left in the SBA 8A certification and win HCaTS, will you be able to retain your HCaTS certification? So far, yes. In other words, they're looking for your they want to make sure that at the time of submission of the proposal, you are an 8A certified company. Now, there is a problem. So you will be able to continue on till the end, unless, because there are two factors here. One is whether you're an 8A certified, and the second is whether you're small under that NAICS code. That second one might be questioned during the process that you're going through. So that's something to watch out for. In other words, say in a period of 2 or 3 years, you outgrow your size, the allowed size, then you might run into a problem. But as far as 8A is concerned, we're told that there's no problem there. There's a question. that says, what about IDIQs or BPAs? Okay, I apologize if I did not explain that correctly. The contracts that you use can be either standalone contracts, or they can be task orders under IDIQs or task orders under BPAs. But do remember, you cannot use the IDIQ itself or the BPA contract itself. You need to use a task order under it. So yes, IDIQs and BPA task orders can be used as one of the 6, but not the main IDIQ or the task order or the BPA. Okay, let's see what's the next question. I'm passing the sound problem from the questions. Okay, another question says, on past performance, how do they treat IDIQs and BPAs? Okay, this is a usual problem. Let me explain what it is to everyone so you understand. Sometimes you have a CPAR that is for the entire IDIQ or for the entire BPA. And then, as I told you, you're not allowed to submit the IDIQ or BPA. You're allowed to submit a task order. So what are you supposed to do? Now, the rule is this. If there is a specific CPAR for the task order, you must, and this is a must, you must use that. But if a specific CPAR does not exist, then you can use the IDIQ CPAR. Now, there is a condition here as well. If the IDIQ is general and covers the entire IDIQ, it's fine. But if the IDIQ mentions only a few of the task orders and your task order is not in it, then it's not acceptable. Another condition. The CPAR for the IDIQ must cover the period for your task order. So you can't use a CPAR for, say, for the IDIQ of 2017, 2018, but your task order that you're proposing was finished in 2016. That can't be done. So the CPAR for the IDIQ or BPA that you are going to use must cover the date or the final day, the year perhaps, of the task order that you are proposing. So these are some of the conditions that you need to actually consider. Okay, another question. What if the contract is performance-based that have a zero amount under pricing because the payment is based on performance, or contracts such as an administrative support training contract with the state government agencies that pay according to hours performed? Would the total hours and amount rendered be considered to satisfy the required $25,000 per year? Yes, you can use, as long as you can prove that was obligated. In other words, you were paid that amount. That's acceptable. I should mention one point, however, and this is not specifically towards your question, but it covers everything. You cannot, for IDIQs and task orders, you can actually, 2 out of those 6 contracts can be a combination of all the task orders. In other words, you have an IDIQ and you have performed 3 or 4 or 5 or 10, whatever, task orders under it. You can sum them up all together and submit this as one contract. That combination of contracts can be done for 2 out of the 6 contracts. So 2 out of the 6 contracts can be a bunch of different task orders under one BPA or under one IDIQ. But do remember, if you do that, you can't then use one of those task orders or any other task orders from that IDIQ as standalone contracts as well. So that's something. And then there's a maximum of 6. So, I mean, assume that you have a contract that has 12 $2,000 task orders, or I should say actually 15 $2,000 task orders, which comes to $30,000. You can't use that because you're only allowed to bunch up 6 maximum, 6 task orders together. Next question, no subs at all? yes, you cannot use any subs. And I don't mean you cannot use subs in the performance of the contract. Once you get the contract, once you're on HCaTS, you can use subcontractors. No problem with that. There's a FAR that says that 50% of the job must be done by you. But yes, you can bring in subs. But in similar self-scoring projects like Oasis or Alliant or others, you can get score from the subs you bring in. So if you create a teaming agreement with them and they have done projects and things like that, you can use their projects and get scores for them. Not here, not on HCaTS. So HCaTS depends fully on what you have performed, and you have performed as prime. Don't remember that. Don't forget that. Next question, number of KSAs in all 6 projects. Is that all 6 combined? For example, if one REP covers KSA 1 and another covers KSA 2, is that plus 600 points? No. That 600 points is if all the 6 contracts have, for example, KSA 1 and KSA 2. If all 6 contracts have KSA 1, 2, and 3, you get 1,200 points. So that's the system. 1 minute, please. Okay, so I think the numbers you've given, 1,200 and 600, are for KSAs for each contract. So one contract, if one contract has all 3 KSAs, and we're talking about one contract, you get 1,200 points. If the contract covers 2 KSAs, you get 600 points. If it covers only 1 KSA, which is the minimum, if it doesn't cover any KSAs, you can't use that project. Then you don't get any points. Now, the point I mentioned is if you can prove that all the 6 contracts cover, for example, KSA 1 and 2, you get 500 points. If you can prove that all the 6 contracts have all the 3 KSAs in them, you get another 1,000 points. So that's in addition. So you get scores based on KSAs for each contract, and then they're going to look at the entire 6 contracts. And if those 6 contracts, all of them have at least 2 KSAs, then 2 of the KSAs, KSA 1 and 2, for example, then you get 500 points. If all of them have 3 KSAs, you get 1,000 points. Another question, we have performed relevant work relevant to a KSA. Instead of option years, the government issued a new contract award to us. Each, there are different contracts, so you can use them. But if they're in somehow connected to each other, GSA might, be picky on it. So that's something to check. If they're independent of each other, as far as contract-wise is concerned, separate documents for statement of work, separate documents in terms of the award document, all of that, then you can use them. Another question, are the points, and I should say, excuse me, because we've passed the 1 hour, and I'm going to continue with the questions, but if anybody drops out, that's fine. We'll send you both the recording as well as the responses to the questions, so you can get them. And I should also say, we have created an HCaTS group on LinkedIn. I would like to invite you to that. We'll send you the link to it. So in the future, if there are any articles or you can communicate with each other, we'll also provide any updates. So that would be a good place to be around and check out for future updates. Okay, next question. Are the points on the scoring system calculated electronically in the web system, or are the points awarded and calculated via manual input? And if that is done manually, who is responsible for scoring calculations? The CO? The scoring system is a form that you fill out. The form is, the calculations are in the form, but you have to fill out the self-scoring system that you will submit to the government. You will know what the final score is. So, there's no mistake. They're not going to take responsibility for it. You must take responsibility for it because you fill out the self-scoring sheet. It is one of the documents that they have sent with the government. It's a PDF document, but it calculates everything, and you have to. That's one of the mandatory documents that you have to fill out and submit for the proposal. What does CTA stand for? Contractor Teaming Agreement. In other words, that's the name, Contractor Teaming Agreement, and it is not allowed here. Are there any exemptions for new 8A firms who don't have a past performance? No, because you get 15,000 points for past performance. So if you're a new 8A, unfortunately, I don't see any possibility of winning on this, unless you have done work in the commercial space. But do remember, as I said, $25,000. So if you've done projects, say $25,000, $30,000, they might give you very good scores if they cover everything else, and if you can get a good past performance rating from the purchasing agent if it's a commercial project. But if you have nothing, if say you're a startup, unfortunately, I don't think you should proceed with this. Another question, in a recent 8A workshop, I was told that it was acceptable to seek 8A as a team under a teaming agreement. Can a team with 8A cert seek HCaTS status? I'm not sure who has told you that, whether it's GSA itself or not, but at least from the RFP so far, they might give an amendment and correct everything and perhaps answer questions. And this could be a question that you can pose to the government. But so far, it seems that they are not allowing any teaming or JVs on the HCaTS. And they did not allow that in the previous submissions either. But as I said, it's a good one to ask them to make sure. We are a new 8A company, so we would not be eligible for this HCaTS yet. Am I correct? Correct. If you do not, a new 8A doesn't mean, you might be a year old, but if you've done any projects that lasted more than 3 months and are larger than $25,000, you're good to go with the rest of the explanations I gave you. So meaning new is only that you don't have any past performance. If you don't have any past performance, right, you're not eligible for this. But if you have anything past 3 months, you can certainly use it. Any FCL requirements in task orders? Yes, task orders might require FCL facility clearance, secret facility clearance. They've mentioned it, but that is not a requirement in the proposal for the GWAC. So you can get on the GWAC and even if you don't have FCL, still participate in other task orders and perhaps just not participate in those task orders that do require secret facility clearance or get it in a process. What if existing 8A HCaT contract holders itself exceeds or reaches 20 proposals? Going back to what I explained, the 20 proposals are new ones. So assume that there are 40 companies, 8A, and do have HCaTS, which is much less. I think less than your fingers. But assume that there are 40 companies that are HCaT awardees and they participate as well. This does not mean that they're not going to give 20 new contracts. So they're going to give 60 contracts 40 to the old awardees, 20 to the new ones. So you don't have to be concerned about the fact that those previous HCaTS awardees might participate or not, because it's not going to bother you. It's just that for them, they should be aware of it and don't lose this opportunity. But as far as new companies are concerned, it shouldn't bother them. Okay. My question has to do with the period of performance. If we have a client where we started to work and worked for 2 years, then we had a break in the performance for 1 year, then we resumed work for another year, can we count that period of performance as 3 years, or does it need to be 4 years? It's 4 years, unless each year you had a different contract. But if it's the same contract, they're going to look at when it started and when officially it ended. If it officially ended, and the other way works too. Sometimes, a contract officially ends, but you continue working for the government for any reason. That they're not going to look at that, the work that you did afterwards. So the official ending date of the contract is important, whether it was 4 years or 3 years, whatever it was. That's what counts. The question, does it allow to use subcontractor past performance if you do prime sub? As I explained, no prime sub relationship is allowed. So everything must come from you as the prime. Okay, there are some questions with regards to our cost to support the HCaTS proposal. Please write to us. I've got your name. We'll communicate with you and we can discuss which system you want. You want review, you want full development, we'll discuss that. What if there are multiple task orders? As I said, you have two choices. Assume that you have a BPA, which has, or a IDIQ, which has 6 task orders. You can use each of those task orders as a separate standalone contract and satisfy the 6 requirements, or you can bunch them together as one contract. And you can do that twice out of the 6. So if you do that, bunch them together, then you need 5 other contracts to bring in. So it's up to you, depending on, which one gives you more score. That's the important thing. Which one of these scenarios will give you a higher score? If you have many contracts, perhaps bunching up some of them might give you more score. If the government, another question, if the government disagrees with your self-score, then will they remove the points or remove the bidder from consideration? Well, if they disagree, usually they'll just remove that score. But if they reach the conclusion that you're overstretching intentionally, then there is that danger of actually disqualifying the entire proposal. So, I mean, if it's the usual disagreements that sometimes, you have not provided sufficient substantiation, they just remove that score. But if they, if you give the atmosphere that you're actually, using, overstretching things intentionally, you shouldn't do that. There is a possibility of actually disqualifying the entire proposal. Okay. Good. And I would like to thank everyone. We are done with the questions. I would like to thank everyone, and we'll be sending the replay for this to everyone by tomorrow. Thank you, everyone, and have a great day. And I should mention a few things, sorry. One is that repeating that thing about having a LinkedIn group that you can participate in. Also, we are having 3 different webinars next week. One is about SAM. Actually, one is on DLA on Tuesday, another on training of SAM on Wednesday, and then STARS 3, which should be of interest to some of you because you're 8A and STARS 3 is 8A requirement, on Thursday, all of them at 2 p.m. Thank you so much and look forward to seeing you again.